Good afternoon, everyone. It's a pleasure to be back at QED. They do a lot of these events, which shows that technology and security and finance are very topical issues. I have 4 points this afternoon. Some of them were mentioned already, so I can skip over them. But the first point, and Björn already made it, is that if you talk about FinTech, people think, oh, well, this is all very new, and this is for geeks and techies. But really, finance is already very technology dependent. And Björn mentioned it, but I looked up the figures. Now, figures is always very hard to find reliable figures. But according to Statista, the financial sector is a sector that has the highest spending on IT. And in 2014-15, it was $650 billion a year. No other sector comes close to that. The second biggest expenditure on IT is manufacturing natural resources, which is $470 billion. So the financial sector, almost $200 billion more than that. Media, very high IT dependent, $430 billion. Governments, about $425 billion. So it shows that finance really is way ahead when it comes to technology. Deutsche Bank said that as a percentage of revenue, the finance sector spends about 7% on IT. Other sectors they surveyed, the average was about 3.7%. So finance spends twice as much on IT in terms of revenue than other sectors. And Forrester says that in Europe it's even a bit more. They attribute this to a lower profitability of banks. So they say that in Europe it's close to 10% of the revenue of European banks, of European financial institutions, goes to technology. About a third of this is said to be personnel, but these are engineers. But that's just to illustrate that how important technology already is in finance. So why discuss financial technology now? FinTech, it's been with us for a long time. Our regulation is already very technology-oriented. If you look at MiFID or EMIR or the Payment Services Directive, it's often about technology. It's about trading venues. It's about trade repositories. All of these things which are highly technology dependent. But what we see now, and I think this is what Björn mentioned with this FinTech too, is we see a confluence of technologies coming together. And I've got here 9. I will go quickly through them. Basically, the continuing exponential increase of processing power and storage capacity at reduced cost. We've got cloud computing, social media and networks, and the data collection they provide, trust service and technologies, mobile technology and services, and the price, the capacity, the reliability. Very fast global distribution systems, often forgotten, but for example, an app store, what it can do is it can distribute technology very, very quickly. If you look in the past, if banks decided to roll out new payment cards, it would take years before all the customers and all the points of sale would have new terminals and the customers would have new cards. Now the apps get updated all the time, and the distribution to the users is almost instantaneous. We've got distributed ledger technology, was already mentioned, cryptography, and basically platform integration and aggregation. Now all of these technologies are coming together now at a level of maturity where they create opportunities for new entrants and for new intermediations. And indeed, a lot of attention goes to the last mile, to the experience, and there is a lot of that. But it's actually the entire financial fabric is affected by it. Now, of course, the financial fabric is fairly dull. I've been working in finance for 20 years, and I can assert that and attest that finance is very boring. It's almost as boring as the plumbing or the wiring of a house. And when architects like the designs of their houses and the buildings, they rarely really talk about how the technology in the house works and how the plumbing works and how the electricity works. But that really is what makes it a convenient house to live in. What it looks like at the end of the day is less important unless you're really aesthetics is the most important thing for you. What all of these technologies have in common is that they're all very data-driven. And financial firms really are, and you hear this often, they really are data firms, or they are computer farms with financial licenses. And what kind of trends are we going to see? Because you see indeed these new entrants. Well, you actually basically see three trends together. You see the incumbents themselves, who are not only heavily invested in technology and also legacy systems, but who are also embracing these new technologies, either in their back office, but more often in kind of a side, like in a spin-off, because it's very hard to transform a vast bank with the newest technology. So, but they're invested either with partnerships, we mentioned. So the incumbents may take up the baton and become the fintech companies of the future. Or fintech companies themselves may segment the market because they kind of focus on the most profitable areas, leaving the incumbents with the utility systems. And then finally, of course, there's the big tech firms. Is that if you have a big distribution network, a big platform, adding some finance on it, be it on Alibaba or be it on Google or Apple, it's not that complicated. Regulation may not necessarily allow it, but technologically speaking, it is possible. Which trend will win, we don't really know, but it matters. Market structure matters. It matters for economic policy. It matters for consumer protection. So we need to see how this goes. So this raises a number of opportunities and regulatory questions. And of course, we don't need to dwell too much on the opportunities. They're there, which are, of course, it's an age of hyper-connectivity. Before, the bank was open when everyone else was at work, and it was closed when everyone else had time to go to the bank. Trading hours were during office hours. Technology makes that this is no longer necessary. Banking, finance is an anytime, any device, any moment proposition. You can do it all the time. Whether that's a good thing, I don't know, but it's possible. It also creates a very big European opportunity because we've been since, I guess, 92, building on a single European market. We have a banking union, and we're talking about a capital markets union. And these programs make the European Union and the single market, or they aspire to make them at least, legal and economic realities. But this technology, this financial technology, really makes it a practical reality. It really obviates the need for, or it obviates the relevance of distance. It really makes it possible to bank anywhere. Now, these are the if you look a bit at what regulators are saying about the opportunities and the risks, it's actually quite depressing because financial regulators, and I'm one of them, we're a bit downers, so we tend to look always at the risks and not so much at the opportunities. But anyway, the opportunities which I mentioned are more competition, more efficiency, better services, especially for digitally connected, wider consumer choice, customized products, simpler processing, self-management, opportunities for cross-border investment, sort of breaking down barriers, better allocation of capital, we will say, diversity in service providers, which is, I think, is a great advantage because banks are all the same in a way. Now you have bigger diversity, which is good, which may also reduce systemic risk, by the way, if you have greater variety of companies providing the services. Easier, better financial reporting. These are all advantages which we can see. But of course, there are also risks. And if you look at the regulators, I've mentioned 4 groups of advantages. Risks, they actually come up with 7. They say, well, financial risks. The incumbents would see profitability risks. Their revenues are under threat. Now, is this 10%, 20%, 30%? Who knows? But many banks in the EU and globally can ill afford to lose 10, 20, or 30% of their revenue. Especially at the time when they are still coping with the overhang of the crisis. Operational risks, so integrating this technology into a bank is very risky. Integrity risks, cybersecurity. Macroprudential risks, increased procyclicality, peer-to-peer, most of it mentioned. People, if automated trading, robo-advice, if it is automated, the speed at which people will respond will be much, much quicker, and that may create risks. Risks to public finances. How are you going to collect your taxes in a globalized, borderless world? Consumer, investor, and policyholder risks are often mentioned. And then finally, shadow risks, which really are the risks which fall outside the remit of the current regulatory framework. Because what FinTech really is doing is it is changing where finance takes place. Financial regulators look at banks, they look at asset managers, investment firms. They don't necessarily look at technology companies. These are not traditionally regulated companies, and you see a lot of financial behavior taking place outside the regulated field, which may be a good or a bad thing, but it's a reality. So what are we doing? I guess a lot of people know that. I think it's that we shouldn't jump to conclusions. We shouldn't say, well, this is moving, therefore we should regulate it. But that doesn't mean we should sort of sit quietly as well. We have a digital single market strategy at the Commission. People often criticize it for saying it doesn't mention financial services. That's true because the digital single market strategy doesn't mention a single sector. But many of the elements of the digital single market strategy are very pertinent to finance, be it on cybersecurity, on cloud computing, authentication. All of these elements are very relevant for finance. We have the Capital Markets Union Action Plan, which looks at different venues, the Retail Green Paper, international work, the call for evidence. So we are really studying the issue with a view to also say, well, what is it that requires regulatory intervention? At this stage, the jury very much is out on this. And I hope that discussions like today will help to clarify that. Thank you.